In this Cardano update, learn how Cardano is scaling in June. That is next month. There's a hard fork coming, there's a bunch of improvements, but there are also other scaling solutions that are going to be happening this year into next year to make Cardano truly scalable for the long term. So I'm going to talk about that. I'm going to talk about some of the short-term activities that Cardano is going through to incentivize people to come onto the platform. I'm going to look at the stats and how it compares with the other blockchains. So check out the timestamps in the description for all of that. For right now, we're seeing Cardano around 80 cents. It's really come off. Obviously, we had it around $1 as resistance, but it's come off there with the rest of the market. Altcoins are really taking a massive battering right now. Not much we can do about that. That's just the way the market is. If you want to try and play this kind of divergence of fundamentals versus price, then obviously long-term investors do want to pick up certain favored projects during this time. So we'll look at the fundamentals right here. Now, TVL is something that's used to gather a general overview. Going up is obviously a good thing. Now, prices coming off of all of the tokens on Cardano mean that, TVL is just not going to be rising at this time, right, when we're seeing a sell-off in the market. But what's interesting to see is, number one, the amount of applications that are now being tracked by DeFi Llama, which is, slowly growing over time. And then looking at each one individually, what we're seeing here is wing riders with crazy growth versus the others. And there's one simple reason for that, and that is stablecoins. So let's get on to Wing Riders and just have a look right here at what they're doing. So this is a decentralized exchange. Now it's going to be exactly the same as, PancakeSwap, Uniswap, on other chains, right? So it's just an exchange of tokens. But one of the main reasons why they're adding TVL and trading volume versus everything else in the Cardano ecosystem is these stable coins. And you can see that here, they're actually trading more volume than anything else. And that's not a surprise. Stable coins are the backbone of liquidity. And we'll get on to Wave Financial, who are going to be injecting liquidity into these DEXs as well, which is really important for Cardano and its growth. Without stable coins, you really don't have anything, right? A lot of these coins as well, when you see MELD, WMT, they're small projects in themselves. And so trading them against ADA is really difficult. You're trading one risk asset for another, and it's just not really what most traders want to do. So what you can see right now is really the main volume. You can see 24-hour volume right here, ADA against USDT and ADA against USDC. They're the main kind of volume drivers. And for a decentralized exchange, if you don't have a stable coin, it really is impossible to grow. We see SundaySwap and MinSwap yet to include stable coins. JED is coming, Cardano's decentralized stablecoin, but they need to get USDT and USDC onto their platforms. That's what most people want to trade. And so Wing Riders is definitely beating them out because basically they have these stable coins on there. So this is going to grow. I just want to compare this as well. You can see the 24-hour volume of the most liquid pair right here is ADA USDC, $166,000 worth traded in the last day, which is great for, a very, very new DEX on Cardano, which, isn't as established as, any of the other chains like Binance Chain or Ethereum. And then obviously fees right here, around $500 paid in fees. Now, if you add liquidity yourself, so if you go over to, portfolio, you can add liquidity, and then you will get some of these fees. So you can provide, ADA and USDC. Now, there's a lot of things you need to know about in terms of impermanent loss, because this is not a stable coin pair. Not going to go over that now, but obviously adding fees and adding volume is good for us as well as liquidity providers if you want to do that. To very quickly kind of compare this though to PancakeSwap, which is really one of the biggest DEXs, probably second only to Uniswap in terms of volume. Cardano and Cardano DEXs have a very long way to go. You can actually see this stablecoin pair right here on PancakeSwap, doing what, 76 million over the last week. $8 million worth of trade in the last 24 hours. And then you're going up to Binance Coin against US dollar Tether, $46 million worth of trade in the last 24 hours. So, Wing Riders is way, off something like PancakeSwap in terms of volume. So there's a lot of room to grow here, but, just to kind of look at Binance Chain versus Cardano, Binance Chain has so much scale compared to Cardano. So there's a long way to go for Cardano to really justify its valuation here, even though it is, half the price of Binance Chain or less. It's doing way less than the Binance Chain in terms of volume in its DEXs. So there's a long way to go for Cardano to, kind of prove that it has a lot of volume, and that's where investors really get excited. One thing that's happening very soon as well to this end is actually a really good positive note here, is that Wave Financial, who I discussed in a previous video, they're basically a big backer and a liquidity provider for the Cardano blockchain, and they are going to be injecting an initial $100 million of liquidity onto these DEXs, possibly some other DEXs that launch as well, which is fantastic. So you can see here they have liquidity with millions in line to support new decentralized finance platforms launched in the Cardano ecosystem, starting with an initial 100 million. Our new fund will support the new DEXs, lending protocols, and stablecoin issuers building on Cardano. You can see down here, Wave will be using the ADA yield fund to provide liquidity to these pairs. So that's token pairs for DeFi lenders. There will also be a similar form of support to augment liquidity to facilitate lending. So obviously on lending protocols which really haven't launched yet, they're going to be launching just after the June hard fork. So 1-2 months time, you'll see these lending protocols come on. They'll have $100 million initially as liquidity to kind of bootstrap liquidity, and then we should see Cardano trying to scale from there. Now, coming to the June hard fork, there's a couple of upgrades that are going to make it easier for developers to basically scale transactions and take out a lot of unnecessary code in those transactions, so scaling the blockchain. So I'll talk about that. Before we get into that, I do have an update for the Crypto Investor course. For everyone that is in the course already, you'll be getting this free update this month in May, around mid-month. Here are the videos that are planned for this upgrade. So there's a massive DeFi strategy at the moment that's happening across a bunch of different blockchains. It's to do with liquid staking derivatives and how you can increase your yield there. I'm going to talk about that. There's a few videos on that explaining what it is, how I use it to basically get extra passive income from my cryptos. Some research alpha, how to get ahead. Going to basically go through my research strategy and everything like that. There's a few videos in this, and then a couple more videos about Ethereum, how that is scaling as well, and some of the new things that's happening there. So if you want to check out the course, I'll leave that linked in the description. There's almost 200 videos now on crypto investing, portfolio management, DeFi, getting the best out of DeFi and the best yields. You can see all these here. Private Discord groups as well, updated for free. Everyone that's in the course, you're going to be getting this update for free. So check that out in the description if you haven't got it already. But there's two things that I really want to talk about with Cardano in June. One is reference inputs and one is reference scripts. Now, Cardano developers are really excited about this, basically making the blockchain way more efficient. So UTXO, which Cardano uses, is very different to Ethereum's model and what most other chains use. And so they have to go about things a little bit of a different way. But you can see they have an improvement proposal called CIP31, which introduces a new mechanism for accessing information in datums, which is like data, within the transaction to identify it. A reference input. Reference inputs allow looking at an output without spending it. So right now, essentially, if you want to reference a datum, you have to spend the UTXO that it's associated with. But with reference inputs, essentially, you can see here, they will facilitate access to information stored on the blockchain without the need for spending and recreating UTXOs. So they'll have these datums or this information actually on the blockchain, and instead of referencing it every single time and having to spend it, you won't have to do that. So again, it's just going to make things a little bit easier and take down a lot of the kind of double information that you put through with a transaction. Then you have reference scripts, which comes from reference inputs, and you can see here the script referencing proposal eliminates sending frequently used scripts to the chain every time they're used. Instead, scripts will be available in a persistent way on chain. This means that the transaction using the script will not need to include the script itself, as long as it references the output. So this is just making everything a little bit more streamlined and not having to reference the same thing over and over again. Why I think Cardano is still in the mix here in terms of going to be successful, and why they concentrate so much on scaling, is because it's the only way that we can really reach genuine, true global scale. Right now, pretty much every layer one is clogged up and is looking for ways to try and increase the scale. So no shade at Solana right here, but this is some of the problems that all of these L1s are facing. Solana have really gone for fast transactions and cheap transactions, but if you know about the blockchain trilemma, what you have to give up is security. Now that security comes obviously at the cost of, if it's very cheap on your blockchain, bots are going to swarm and DDoS attack your blockchain rather than something like Ethereum, which is incredibly expensive. It's financially beneficial to attack Solana because the transactions are so cheap. And so you give up this security. And so Solana goes dark for 7 hours. This is really, really unpalatable if you're looking for security and something that is reliable to go down for 7 hours. And this is not the first time. Now, no shade at Solana here. They're trying to obviously, meet a need from consumers who want fast, cheap transactions, and they've had to give up this security. In the meantime, maybe they can work to, grow that as well. But obviously, we've had the other side metaverse launch on Ethereum, and they're the other side of things which have concentrated solely on security, and so they're having to give up cost. And you see that during the other side launch, the average gas cost on OpenSea was $4,000, or that was probably the peak right there. A few $100s just to send a transaction is just absolutely outrageous. So obviously what we need, and we can see the spike here on this, if you want security, then you're going to have to pay for it. If you want cheap transactions, you're going to pay for it with security. So layer 2 scaling solutions are really the answer here. And that's mainly for Ethereum. Ethereum are building this with, have Optimism and Arbitrum, which are optimistic rollups. And then you have a lot of different ZK rollup technology as well. Layer 2 rollup technology is the way forward. Cardano are working on this as well. A few different projects. You have Orbis project here, which is working on ZK rollups. And then you have Milcommodore, which is working on ZK rollups as well, trying to be an EVM chain on top of Cardano as a layer 2, and then maybe having layer 3 as well, scaling solutions. This is the only way that we reach scale with blockchains. You can't just start an L1 and say that it's cheaper than the rest. It just doesn't work because eventually it will clog up with the technology. So layer 2 for Ethereum and for Cardano, it's really the focus right now. So when you're doing research with chains, they're not working on some sort of layer 2. They really are behind because this is the way that the industry is going. I have a lot of videos on layer 2 and why it's so important in the crypto course. Like I said, I'm doing an update for this. So everyone that has the course already, you'll be getting that free of charge in the middle of May this month. If you haven't got it already, I'll leave that linked in the description. You can go and check it out and all of what's included there. I'm James, this is Money CG. Cheers for watching, and I'll see you in the next one.